Today, we're going to be taking a look at the total cryptocurrency market cap, the macro chart on Bitcoin, and of course, a short-term price action. Let's go ahead and dive into today's video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and take a look at Bitcoin today, talking about the total cryptocurrency market cap, the short-term price action, and of course the macro. Bitcoin is still struggling to break through the 21,300 to 21,500 resistance. This is the major resistance zone currently on the chart that we do need to break above to see any sort of continuation upwards and see this uptrend continue toward the upside. Until then, this resistance is going to be a major point of rejection and could result in a healthy correction back towards 19,200 as a lowest before we see any sort of continuation upwards again. I do not believe this pullback we will potentially see is going to result in new lows. I think it will be a healthy correction after a 30% rally before we see any more move to the upside. But of course, if we do manage to break through 21,500, we could see that continuation trigger a little bit sooner. But we'll come back and discuss all of that in today's video after we get through the important stuff. So before we get started, smash the like button, hit the comment button, subscribe to the channel. Obviously, you can join our Telegram channel, the second link down below in the pinned comments. Charts, analysis, videos, information, news events, posts, everything you need to stay on top of the market, you will find in here. So go ahead and join up. Second link down below. Now, if you're interested in trading signals, if you're interested in our exclusive VIP group chat, all of our signals, specific entries, targets, stop losses, you can see over here a variety of different trade signals, altcoins, Bitcoin, all that kind of stuff over here. You can join our VIP channel. Again, all the information can be found below. We only have 15 lifetime member slots left, and then we're closing off the lifetime membership access. So go ahead and join up. Let's go ahead and start with the market data. How are we looking? January 27.1%. Slight little pullback since yesterday's video. We're down about 1%. We were around 28% yesterday. Volume is up 9.7%. You can see in the top left-hand corner of the monitor over here, $86 billion, are up 9.7% in the last 24 hours. Liquidations are up 127%. Massive, absolutely massive. Again, a lot of these liquidations, guys, are shorts. A lot of these liquidations came from shorts. We can see over here, a lot of these liquidations came from shorts. A lot of people, again, were expecting the price to drop immediately, but we did end up seeing that one little small push upwards close to this $24,000 range, which would have liquidated a lot of people. I think a lot of people would have entered longs up over here, and now longs are getting liquidated towards the downside. It's very likely this pullback will continue. Moving on from there, volatility is at 1.8. We do expect volatility to continue to go upwards over the next couple days, as it prices in this recent surge in volatility in that 30-day period. So volatility can go upwards, liquidations are up, volume is up, looking pretty decent. Right now, long to short ratio, we definitely have more longs to shorts, but it is quite even. So how are the traditional markets looking? Was these are opening up now. So DXY has bounced from that support zone we talked about yesterday. We were talking about this yesterday. We're all the way down over here. We said we're probably going to see an early bounce in the support zone due to the fact that S&P 500 is at resistance, Bitcoin is at resistance, and the DXY is very close to support. It's likely that we'll see the DXY bounce, push up to 102, 103, and it's likely we're going to see S&P 500 and Bitcoin find a bit of resistance and struggle at those resistance levels, and that is what we have seen. So the Dow Jones, the S&P 500 are at resistance, Bitcoin is at resistance, and we are starting to see the DXY turn around a little bit. It's very hard to say how high this will go. I'd be looking at these local lows on a very small time frame for targets. We're looking at 103, we're looking at 103.7, we're looking at these gray boxes, but it's very unlikely we're going to see a full reversal on the DXY here, but I will be looking at this to see some short-term rallies and potential zones of resistance on the other markets. Looking at the Dow Jones, we did find a little bit of resistance at the local top over here. We printed at 34,400. We still do need to break above the 35,000 level to see any sort of continuation upwards, okay? Any sort of continuation will require us to break through 35,000. We did have a descending channel or a bull flag formation over here we actually broke out of. Again, we broke out of this dotted line over here, which is good, representing these local resistance zones over here So that was good, but again, it looks like we are starting to weaken in this trend. We do need to see a surge of volume. We do need to see these resistance zones break. Looking at the S&P 500, we are at major resistance here. Again, an indication that the markets are at resistance. As we already know, Bitcoin and S&P 500 are correlated to a degree of 0.7 or 70%. So when we see the S&P 500 at major resistance, it is more likely that Bitcoin is going to also reject from the resistance it is sitting on, or at least as well struggle at the resistance it's trying to break through, which is exactly what we're seeing. Couple that with the fact that bond yields are at support over here, 2 years and 10 years. Couple with the fact that these are at support, couple that with the fact that DXY is at support, it is likely to assume that there is going to be a bearish bias on the short term for the markets, meaning that a pullback at this resistance is much more likely than an immediate breakthrough. Okay, I'll say it again. A pullback at these resistance is more likely than an immediate breakthrough. It doesn't mean we won't break through, but an immediate breakthrough, which is exactly what we're seeing. We're seeing a drawn out consolidation, 2 or 3 day consolidation underneath this horizontal resistance within a very, very tight percentage moving range. We're looking at 1.5% movements. So we are expecting again some volatility to pick up as the Bitcoin price action decides whether it's going to lose this 50 EMA on the hourly and fall into this lower historical volume trading range. You can see in the VRP over here, we really don't have much historical trading volume range in this visible range over here, down to about 19,500, 18,000. And above this 21,000 range, we got basically nothing. If we zoom out, we are going to fly through that range up to about 22,500. Okay, so that are the ranges we're looking at on the small time frame. But let's go ahead and jump into the total cryptocurrency market cap now. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Okay guys, we're going to take a look at the total cryptocurrency market cap next in relation to the Bitcoin chart and talk about potential levels we could see rejections from or moves up to on the total cryptocurrency market cap, and how that could potentially affect Bitcoin on the smaller time frame and the macro chart. So pointing out the differences, currently we did see Bitcoin drop quite low below the 2017 all-time high, where we did see the total cryptocurrency market cap actually hold on to the 2017 all-time high slightly better. Currently, we've seen both charts break out of a falling wedge structure. The Bitcoin chart rallying up to retest the November top on the 5th of November before we had that FTX crash at around 21,500. However, on the total cryptocurrency market cap, that same point of resistance sits around a $1 trillion mark, and we are currently sitting underneath that resistance by about 6 to 7%. So, what does this actually mean, and what does it tell me? It tells me there is room to move currently still within this move before we start to see a rejection. Now, that doesn't mean Bitcoin is not going to reject. That means this uptrend, this rally upwards, is not quite over. What we could still see is a healthy pullback on Bitcoin towards the downside before we see a final rally upwards and potential rejection on the total cryptocurrency market cap at the $1 trillion mark. That could either result in Bitcoin having one final move into this upper range between 22,500 and 24,000, or even a continuation through if we do see the total cryptocurrency market cap push through that $1 trillion range. So when we come to looking at the broader markets, altcoins, Bitcoin, we do need to consider what the total cryptocurrency market cap is looking like and points of resistance on the total cryptocurrency market cap. Okay, looking at 1 trillion, that is going to be a major resistance zone, as well as psychological resistance, and therefore the entire market is likely to run into resistance as we approach that level. Currently, we do have minor resistance exactly where we are. This minor resistance, as you can see, represented by this area of resistance we retested between June to July, as well as September, all the way through to October, with about 3 months of data of resistance at that level, a current resistance level we are currently retesting. Again, this is a point of which we could see a breakdown for the total crypto market cap and for Bitcoin before we see a healthy rally. But I do expect if the total crypto market cap rallies up to $1 trillion, we are going to see a strong reaction at this level, whether it be a strong rejection or a strong continuation. Now, for the total crypto market cap to reach 1 trillion, we will most likely see Bitcoin within this range. So what does that mean? It means if the total crypto market cap does see a rejection from this current resistance zone and rally towards the downside, it's most likely to retest this downward trending support level, okay? That will send Bitcoin back down to do a similar thing. However, it will not reach the depths of this downward trending support level. I do believe it will retest the POC level at 19,200 before we see a continuation upwards. Again, the continuation upwards to that $1 trillion mark will bring Bitcoin into this 22,500 to 24,000 range before we see a very strong reaction towards the upside and continuation, as we would see on the total crypto market cap, retesting some of these highs and lows, or a very strong negative reaction towards the downside, which is incredibly unlikely, okay? So the total crypto market cap, again, is looking very strong. We're broken out of a falling wedge. We're looking at a strong retest and support zone at the 2017 all-time high. We are currently retesting some stronger resistance levels as expected after a 30% move, right? It's unreasonable to assume that retesting these resistances are upsetting or demoralizing. It's a 30% move. Of course, we're going to come retest resistances. Of course, these resistances are going to be very difficult to move past. We've had so much volume, so much buying coming to the market. It's so hard to sustain that strength over a 30-40% move, particularly when we're not in a bull market yet, okay? So we are coming out of resistance here. It's very important to be aware. The S&P 500 is at resistance and breaking down. We do have to be aware of Bitcoin, particularly on the short-term time frame. We are looking at these red lines as targets. 20,800, 20,150, 19,500, and absolute worst case scenario, I don't think it's going to happen, 18,800, but I do not think we'll see that, okay? For the upside, guys, like we said, breaking through 21,500 will trigger not only a break on the total crypto market cap through that resistance, but of course, as well as on the Bitcoin chart over here, resulting in that swing toward the upside and resulting in the total crypto market cap taking a move to 1 trillion, where we will face that next major resistance. So right now, the game is, are we going to reject here and have a healthy correction downwards before we see the rally upwards to 1 trillion, or are we going to break through this resistance and see that rally to 1 trillion first and then see a healthy correction? Again, the short term says it all. What we're looking for in the short term right now is an hourly break below the 50 EMA, okay? The 50 EMA to signify a shift in the trend. Remember, we have been sitting above the 50 EMA this entire move upwards. We saw a few breaks below this at around $17,000, but as soon as we broke through our $17,000 range, as soon as we broke through this horizontal resistance range, we remained above the 50 EMA this entire rally, right? We've been above the 50 EMA now for about 30%. We're looking at around 25, 26, 27%. Breaking back below that on the hourly, closing hourly candle below will signify a shift in the trend, and therefore we are likely to see that rejection and pullback. I don't want to go into too much today. I want to keep today's video nice and short and sharp as I really don't have much time, but I hope you enjoyed today's video. If you have any questions, leave them down below and we'll catch you guys tomorrow. Cheers.